I hope that you enjoy our videos, and please press like. It'll help us a lot. It's important that you all should know I make no claims to be something that what my advice is going to be worth anything. Anyone should do their own work. And I also have had history since 1975, a number of major mistakes as a result of which I've had considerable volatility in my results. And so therefore, once again, do your own work. One thing that I've felt recently is that the period in having over a year of being able to hold interest rates from going up significantly, in part due to some successful policies on deregulation and other factors. But I think that the odds are getting to be pretty darn good that ability of to keep interest rates, in my opinion, artificially suppressed is over. And that's the single biggest reason why I'm very comfortable in saying that going either short American interest rates, such as the Treasury bond on the long side, the 30-year T-bond, or more important, considering buying puts on SOFR as a way of benefiting from higher interest rates, are the clearest areas that I currently feel us speculators should consider. Let me just review just how dangerous the potential for higher interest rates are. I think the biggest problem that we have in keeping interest rates low is the enormous national debt. What's the last number? 38 trillion in federal debt, with an annual deficit of still, I think, close to 2 trillion, and something like over 100 billion a week in sales of government debt to meet all the obligations of the federal government. $100 billion have to be auctioned off by the Treasury Department every week. And the only way they can get all that money raised is by satisfying what? The interest rate that the buyers want. And I think that one phenomenon can cause interest rates to move up. So you have that as a major factor. In addition, of course, we have what I think is very important, is a classic bull market in what is real money. We're talking about gold and silver. And where are the people who are going to be buying the gold and silver going to get their money from? Well, according to some of the major American firms like Morgan Stanley, they're going to be selling bonds in order to use the cash to then buy gold or buy silver. Once again, you have, therefore, a factor which pushes up interest rates because it's very dangerous for the bond market. And then finally, we have the foreign situation with both China and Russia, particularly China, who are very unhappy with the position of the U.S. currency, the dollar, being so beneficial to the United States as the reserve currency, that they are structuring new institutions to allow countries that in the past have had to rely on owning a lot of dollars to be able to shift toward the BRICS institution is doing. And this is all factors that I think combined can cause interest rates, which in the last couple of weeks have had quite an increase, to continue higher. And finally, remember that back in the late 70s into the early 1980s, we had a great chairman of the Fed named Paul Volcker. And he also was dealing with a situation where inflation, as it is today, was a real problem. And the only way that he could reduce inflation was by announcing, which he did, to cut the growth rate of the overall money supply. And that short term meant bulge in interest rates, but longer term was a very successful and moving inflation back down to the reasonable levels that we all benefited from as a nation between the mid 1980s and, let's say, 2008, where we had another major recession with the real estate problem. And so we put all that together, and I would say do not own bonds. Any bonds that you have that have a maturity of more than, say, 2 or 3 years, I think should be sold. If you are too cautious to be as much of a speculator as we are, then you're at least better to have cash than you are to have bonds. I also would say the same thing. Stay out of the stock market, which is highly overpriced. And specifically, if you want to do what we recommend, then perhaps number 2, look at shorting the 30-year T-bond. And number 1 is look very carefully at buying puts. We like the month of December of 2026, buying the puts of December SOFR, and those in the last 2 or 3 weeks who did that 2 or 3 weeks ago, and we first got back into being so positive about buying SOFR puts, have already done very well. I think there's more to come. If you want a copy of my book, The Speculator's Mosaic, just check below, or it can also be bought on Amazon.